Hello everyone in the Fine Network. This is the last episode from our series of 5 podcast talks, and today we will dive into digital payments in great style. And this episode will have a different approach. It will be focused on the particularities of investments in startups, most specifically in digital payments new enterprises. For that, we have two very special guests. Benjamin Berényi, CEO of PastPay, one of the most prominent fintech startups in Eastern Europe, and Alison McMurtrie, one of the main voices in Ireland for Fintech, an entrepreneur and also angel investor. And as a moderator, we have Madalina Sumedrea, project manager at RoFintech, one of the final consortium partners.
Thank you very much, Carolina, for this introduction. Alison, Benjamin, thank you very much for being with us. Before jumping into technical, question, we would like to have a short introduction for each of you to know a bit more about yourselves. Let's start with the ladies. So, Alison, please tell us a bit about yourself.
Thank you, and really excited to be on the podcast today. So I moved to Ireland in 2020 and accidentally fell into the startup ecosystem here, kind of unplanned, but found it very, very interesting. And I co-founded a green investment platform, which was blockchain based. And that kind of kicked off my deep interest for fintech. And since then, I've been, working in the ecosystem, being a voice. I was voted one of the top 30 women in fintech in Ireland to watch, and really have been trying to develop fintech for women, for within the startup ecosystem in Ireland, and really, discussions with central banks on how they can help, foster innovation, how to bring the innovation, and it makes me very, very excited. I also invest in as an angel investor, both in fintech, but really with a focus of tech for good, things that have a social or environmental aspect and sector agnostic. And really mentor and advise a number of startups within the Irish and UK ecosystem.
Great, yeah, and thanks for the invitation as well. Happy to be here. I'm Ben Berényi, CEO and co-founder of PastPay. I have a history of being in the financial industry. I was a management consultant. I worked at a B2B fintech startup in Berlin, gained some exposure in the US and mostly Western European markets as well. And we founded PastPay with the vision to digitize SME finance, and then we focused onto one very specific segment, which is invoice financing. And it's very interesting that the whole B2B payments and B2B e-commerce ecosystem is going through a transformation. So basically the same paradigm shift is kind of happening right now in B2B that has happened in the past 10, 20 years in B2C. And for that, we are providing a payment solution with which SMEs and companies in general can pay later for their purchases while the merchant receives the funds immediately. This creates a win-win situation because liquidity and working capital is no longer a constraint in this setup, and this way the buyer can purchase more and more frequently, and this leads to the merchant generating more revenue and faster. And basically this is our mission, to make these transactions fast, smooth, and of course secure.
Lovely. Thank you very much. So it's going to be an interesting talk with an experienced investor and an enthusiastic fintech founder. Let's start with a question for both of you. Looking ahead to 2025, what are the biggest trends you anticipate shaping this area of digital payments, particularly in the B2B space?
Well, I can go first. I think one of the biggest trends, I think is twofold really for me, and it is all linked. One is how we think about finance and payments. I think as Benjamin was just explaining, the change of the concept of working capital and things, I think that is going to continue to evolve in the short term and into the longer term. The way we think about financing in general is going to change. The ecosystem of the past and the way that we banked in the past we're not in the same situation as today. And so I think there's a large evolution, and I think that's going to continue to evolve. And even the terminology around it, I think that's going to start to change. And we're going to see some really innovative new products come to market around financing and alternative ways to finance your business. But I think that it kind of goes hand in hand. But I think underpinning everything in financial markets today and financial products is around fraud and fraud protection, both of individuals and businesses. It is astronomically on the rise, and digital payments, instant digital payments, are such a target for the criminals out there today. I do think that the implementation of digital identities, I think that's going to be for individuals. That's going to be a game changer. But how fast can that move? How fast will it be adopted? But there needs to be some kind of solution for business. So some form of digital identity kind of avatar for businesses to prevent fraud. And what does that look like? So I think that's really where there's a lot of work going on. And I think there's going to be some really exciting solutions come to market in the next couple of years. But I think that's the areas really to mark their hotspots.
Absolutely, fully agree. Actually, these are two of the topics I wanted to touch base on as well. Yeah, of course, embedded finance is here to stay and evolving very, very rapidly. So that's super exciting. And yeah, what you mentioned, Alison, as well, like the whole naming around it is going to change. So the goal of using a financial product is not to use the financial product, but to get the benefit out of it. So for instance, if I'm leasing a car, I don't want to have a leasing product. I want mobility. I want a car. So basically the prominence of the financial product is getting more and more into the background, and basically it should be enabling these kind of value add services. And yeah, unfortunately, fraud, I can speak from firsthand experience. So this was actually the main topic I was going to mention as well, because, well, we have seen a 500% increase in attempted frauds just with PastPay and how they wanted to use it. And it was, well, a multitude of solutions. So the easiest fraudulent documents and from the offline world with trying to scan documents in an improper way, or using AI avatars to validate themselves with the stolen ID card. So it's the range is quite extensive, and well, we see the attempts increasing really fast, and the tools becoming more and more sophisticated. And well, of course, everybody's talking about the AI revolution, but the exciting part here is whether the good guys or the bad guys can stay ahead in this kind of trying to balancing out the B2B, or not just the B2B, any kind of payment ecosystem. Who can catch or yeah, who's going to be smarter, who's going to be evolving faster in this kind of setup.
Thank you. Benjamin, in addition to your response, a small question. How do you see PastPay contributing to this evolution of B2B payments?
Well, we are actually very focused on into this area. So of course, this is we are highly motivated here because we take over the risk and non-payment and fraud risk from the merchants and these kind of setups. So basically, if we are financing an invoice, unless the merchant has conducted some kind of fraud or anything, we take over the full risk and responsibility of verifying that transaction. So this is actually one of the main values that we provide to these merchants. So if an invoice is financed from us, they can take it off their mind, and basically they can just focus on to the business, and they don't have to think about, I don't know, collections or going to court if there is a fraudulent transaction or anything. And because of this, we are investing heavily into these kind of anti-fraud measures. So we are taking, I don't know, digital fingerprints, geolocations, checking IP, mobile phone, email address, health scores. We are continuously trying to introduce new measures. And it's again a question of balancing it out. How many false negatives and how many false positives do you have in your pipeline? And sometimes you're gonna be too strict. Sometimes you're gonna be too liberal in this regard. And this is a continuous task for our risk team. And well, we're working here to provide, of course, the most value to the merchants and their buyers as well.
Mm-hmm. Thank you. Super interesting. Thank you both for your answers. Alison, a bit on your area regarding sustainability. Do you consider there are some key indicators that suggest strong potential for startups for both financial returns, but also impact returns aligned with tech for good and sustainability?
Yeah. Well, I will try to keep this short because this is one that I can get on my soapbox on. But I think that the time of consumerism is somewhat shifting, and capitalism and consumer capitalism is shifting if we want to engage and embrace sustainability, impact, call it what you want, but something that, you know, brings good to the planet and to the people. And it's essentially, you know, you can get lost in the terminology, but I believe that it's, you know, it's doing what's right. And that's kind of where there's starting to evolve, and where I believe there's a little bit of conflict with the old style capitalism. And we're trying to do the cleanup from that. So I like to use the term conscious capitalism. We're still here to make profit, right? And that's okay. It's totally fine to still make profit. We're not expecting you to give everything to charity or to a foundation or whatever. You know, that is definitely there, but it's just consciously thinking about it. And I think that when you're looking at fintechs and other startups, and are they for impact, are they not, it's very easy for them to like put a little bit of spin on it and say, yeah, I'm an impact startup just because I offset my AI footprint. It's not to your core, right? But what you can do, what excites me is people who are creating, you know, fintech solutions that maybe have accessibility at the heart of them. Okay, so it's like, you know, your Revolut app that can be text read for someone who has visual difficulties. It's voice command. You, for example, Zoom. You can't, if you're watching Zoom, you can't use voice control to ask a question in the chat function. That functionality doesn't exist, and it's just thinking about accessibility at the core of your product for everyone rather than, you know, the able-bodied people. So I think that that's something that's really, really interesting that you don't see enough about, and it's something that I definitely ask people around. But one of the biggest, I think, concerns that I have in the startup and tech for good space around fintechs is around education. The way generations think about money, and now we see this large influx of new startups that are creating financial educational content because individuals do not know how to manage their money. They don't know what a loan is. They don't know what a mortgage is. They don't know what a car loan is. They don't know what the APR means. And so we're selling them these products without making sure that they actually understand what they're buying. And again, this comes back to conscious capitalism. It's just making sure that they're engaged and they're aware of it. You spend 50% more money when you tap a card rather than using cash. Now, is that, it's impulse buys, it's just the ease and the simplicity of it. But is it necessary? And it's just thinking about how can we package this in a way that's fair for people, but whilst developing and innovating, we will probably move to a cashless society, which I'm very, very excited about. And I really kind of hope we will. But how can we make sure that that's done appropriately? And so it's these innovations and these thoughts that are really that when I'm looking at a startup and it's the tech for good or sustainability, it's those little things which will differentiate a startup and will give it the longevity rather than just wham bam, I built a product, put it out there.
Thank you. Noted. Now a question for both of you, and I think it's going to be interesting to see the perspective of an investor and the perspective of a fintech founder. Cross-border payments are becoming increasingly important. What are the opportunities and challenges for fintechs looking to expand internationally?
This I'm happy to start myself. We have set out on this mission from day one to actually enable these cross-border transactions as well, because in B2B it's very, very common, especially if you can look at the Eurozone, to have these kind of cross-border transactions. I don't know, even from you're ordering goods from Romania to Portugal, or I don't know, Estonia. So basically very, very long distances don't play a role in these kind of transactions, because the transactions are much, much larger than in B2C. So it doesn't make sense to ship one pair of shoes from Romania to Portugal. But if it's 200 shoes or 500 shoes, then obviously there is already a business case, and there it makes sense to open up the spectrum of potential suppliers and look at your purchasing on a European level. So basically from day one, we try to support these kind of transactions as well, and we see that these kind of demands are growing as well, and especially with these kind of new developments around the US and international trade being becoming more risky, or at least perceived to be more risky, and you don't know what's going to happen tomorrow and what costs you can plan on in the long term. These kind of inter-European trades are very important, and this is why I would actually distinguish even within cross-border payments, because there are the European cross-border payments where the borders are significantly decreasing, and these kind of transactions are much, much simpler. And then there is the real international or outside European trade, which again becomes a much, much larger challenge, especially since the data is in many cases not there. So if you're talking about African or Asian countries, it's in many cases very, very difficult to gather data so that you can make a proper decision there. So here it's since Alison mentioned this kind of inclusion question, here it's again the question of what markets can you include into these transactions, and we see that a lot of players tackling these kind of international or cross-border transactions are focusing on the developed markets, and it's very difficult to bring in the emerging markets into these cross-border payments. And in B2C there is already a lot of things happening, so money sending back to the countries of origins. But in B2B, these transactions are still a lot of time or long decades behind the current trends.
Yeah, I think that I would echo that. I mean, you've got it spot on. I think that where there's opportunity, I think the traditional banking has not caught up in the digital age, and they have a responsibility where they have let down these developing nations. Um, they haven't evolved, they haven't innovated. And I think that's why you see a lot of smaller fintechs, more innovative, more agile, coming in and trying to solve these problems and link these countries, because there is such an opportunity. But if you're paying for something, if you're going through a traditional bank, it can take weeks for that money transfer to happen, which in some of these countries makes it prohibitive to actually trade. So it's really about, what is the risk appetite? And ultimately, everything comes down to risk. What is the risk appetite of some of these larger banks or traditional banks, and these younger innovative banks? Where does the risk sit? What risk appetite are they going to be happy with to facilitate these ease of payments and make it easier? Globalization is not going away. I think that, the management of the FX, and the impact of that, I think there's opportunity there. There's around, FX trading as a kind of loan and prepayment methodology. There's some, exciting little startups that are working in that realm as well, between Africa and Asia. And it's really, this isn't going away. And if you have a good product, it's always going to be a global product. But how can you leverage that? And I think traditional banking has a responsibility to step up and either help the innovative startups solve the problem, because ultimately it's too late for legacy to take that on. And I mean, if you've ever used a banking app with one of the large banks, I mean, the functionality is not quite there.
Yes, very, very limited and very, very difficult. And just maybe to add on that, so it might take weeks for the money to arrive in these emerging markets, and you don't know how much is going to arrive. So you're sending 100 euros from Europe, and you don't know if it's going to be 50 euros at the end of the day, or 70 or 90. So
that's a great point, because they move it through so many bank accounts and they each skim off. I mean, that's not how to do business.
Yeah, exactly.
Opportunity.
Exactly. Thank you very much. Alison, from your perspective, what are the common red flags you observe in investment, and how do you assess if this might be manageable or not?
Governance, and governance again. It is by far the biggest red flag and risk. You have some people, some individuals that are like, they get it and they're really switched on and they surround themselves with experts, and that's great. But there's a lot of people out there who, they have a great financial product idea. They've never operated within fintech before. They've never engaged with a central bank before. They've never dealt with financial regulatory requirements before. So it's really, the biggest risk is, yes, they might have a great idea, but it's how do they translate that idea? How do they make sure that there's protectionism for their users? How can they prevent fraud? So it all comes under governance. It's what is their structure, who's on their board, are they regulatory compliant if it's relevant? If they're not, what are they doing with it? How are they working jurisdictionally? Where does their regulation sit? Not every regulation is the same in every country, even within Europe. Some it's easier to get than others, but there's like a little kind of hierarchy with some of them as well. So if you are more serious, you're better going for a better quality regulatory approval. And so it all comes down to that. And, and that is their opportunity. And it's, as soon as if a fintech startup is looking for, seed investment and they don't have a board of directors set up, that's a red flag.
Okay, thank you. Thank you very much for this expansive answer. Benjamin, looking ahead, what are some of the key trends you anticipate in the B2B digital payments and how PastPay will take advantage of this?
Well, I think in B2B payments, a lot of there are a lot of developments actually, because well, in B2C, the payment system or is often referred to as POS, so point of sale, and in B2B, this I think is not necessarily true, because it's more a process of sale in the POS, because it's a much longer sales cycle. So it might be that from the point of order until the delivery or the payment, there are, I don't know, 2 weeks or even 2 months in between. And this entire process of preparing the goods, of, I don't know, exchanging the goods, of, I don't know, having replacement products, or for whatever reason, there might still be or still a lot of changes might happen, or there might be different delivery addresses for different types of products. So it's very complex, and it's highly connected to the whole supply chain, or the whole whole chain of B2B commerce. And basically here there are a variety of moving parts on how we digitize, I don't know, the supply chain, logistics, the tracking of goods, basically everything that's connected to this. And B2B payments has to be able to follow these, to accommodate these, and to support this entire process. And even though there are a lot of developments happening, and AI is automating a lot of the manual tasks, it's still very difficult to get the human touch out of B2B sales and B2B transactions. And I think this is going to be exciting to how do you keep this balance between automation and AI and the human level, and this kind of hybrid sales and hybrid transactions, where do you keep the interaction points between the humans and the robots. And this is something we are trying to tailor for as well. So we are trying to build this kind of hybrid sales tool that is helping these merchants in this environment.
Interesting. Looking forward to see how PastPay will evolve in this area. Alison, as you might know, an important pillar in FINE projects are women-led fintechs. In regards to this, have you seen any opportunities and both challenges for women-led digital payment startups who are securing investment or are scaling right now?
So, I think the big positive is, if you look within the financial sector and you remove investors or investment banking and things, there is generally a pretty good level of representation of gender within it. And one of the other big positives is when you look at central banks and things as well, there is relatively good diversification compared to other sectors where it can be much less. Where the financial sector really is let down is when you look at investors and GPs and investor profiles. It's there's some really scary statistics out there where less than 10% of GPs in the UK are female. It's really sad. And why is that important? It's because when so there is opportunity. I think women think differently than men, and that's good. and because you approach problems from a different way. I don't like all female-led teams. I don't like all male-led teams. I like them to be mixed. Um, and part of my investment thesis is that, you know, if it's if it's same gender, you need to have a diverse team around you, because you don't have that proper mindset and you're not being challenged. But what you see is that I think there are lots of females that are coming up with great ideas, approaching them slightly differently, but where the challenge is in getting that investment. You know, females get less than 3% of all investments worldwide. And that doesn't matter if you're fintech, if you're medtech, if you're, whatever tech. 3% is not that's not good enough, and that's why we need more females in investor roles, because then they're more likely to push that inclusiveness, because the ideas are there, the opportunities are there. They're thinking about things differently. I think it's really, the opportunity is there, but you need to surround yourself and build a team around you that will help lift you up and give that credibility to the investor options. So I think that, are there women-led digital payments startups? Yes. Are there women-led fintech solutions out there? Yes. Some of them are really, really exciting, really interesting. Are they getting the investment? No, they're not. Is this a problem? Yes, because they get to year 2, 3, 4, they can't get investment, and they have to pivot, they have to change, sell off for much less than it is worth, or start again. So I think the issue is not around necessarily, are they in the ecosystem? I think they are. I think it's the next stage up. How can we make sure that they're getting the money? And I would like to see a lot more corporate finance, corporate investment come in some of these, the likes of the big banks. These are financial solutions that they can add into their portfolio. The likes of some of the other, large unicorn startups, putting the money and investing directly into them, because that's potentially into their portfolio, rather than, traditional VC. I think traditional VC, there's problems with it. Again, it's a bit like traditional banking. It hasn't evolved. It's a pretty nasty beast. And I think that that's where there's opportunity, but I think they can overcome that by building a really strong board around them. I think that getting into sandboxes to test and play with their product is really, really essential, because you've got, there's the European sandbox, there's an Irish sandbox now, there's a UK sandbox. You don't need to be from those countries to be able to apply and get in. And it enables you to test and play and get customers, get FCAs and other financial central banks and financial control authorities on board, aware of your product, so that can help leapfrog you. And those are proof points that you can use when you are applying for investment. So I think that is the route out, because I think that there is a barrier there, which is really, really hard to navigate. The final point is, people, fintech should be looking for investment where there's large financial hubs. So, for example, look, a fintech shouldn't really be looking for investment in Dublin, in Milan, in Edinburgh. It should be the likes of Berlin. It should be London and Singapore, Hong Kong, big financial hubs, because they get it, and it's much, much easier to access capital in those areas, rather than trying to get people where it doesn't really fit their thesis.
Super interesting. Thank you very much. I think all the ladies listening to our podcast took notes already. The last and not least, it's a question for both of you, and from different perspective. What piece of advice would you give to someone who is just starting their journey in the digital payments industry? Benjamin, as a founder, Alison, as a new investor. What would you advise them?
Well, I think for a founder, it doesn't really matter if it's, I don't know, payments or I don't know, health tech or whatever. You just have to find a problem, really understand the problem and offer a solution to it. And in B2B payments, there are a lot of problems that you can focus on, which Alison pointed out very correctly in the beginning, provide a lot of opportunities. So it's not that difficult to find a problem, and there are a lot of opportunities because of that. And you just have to focus in on it, understand it very well, talk to a lot of potential customers that you think could be your customers, understand their pain points, map it out, and try building a solution that is solving a real pain for these customers. And if that's working, then everything else after it will evolve more or less organically. Building a startup is always difficult. So there will be setbacks, and you will build the wrong product, wrong solution. But if the fundamental problem that you have identified is correct, then you will be on the right path. And this is, I think, the most important aspect of it.
Yeah, I think that absolutely. That's great advice. It's a really good product that really solves a pain point. And you want, as a founder, you want to have created something that people go, ah. And that's like, you've got it when someone goes like that and you get that reaction, because you know that you've really done something different. I think either as a founder or an investor, it's network, talk to people, get out there, talk about it, learn, be inquisitive, ask questions. I think it's as a new investor, what is it that when I started investing, I said I didn't have a thesis. I would just know what I wanted to invest in. But the reality was, over time, I realized that it was tech for good, because everything that took my interest always had this social or environmental aspect to the core of the business. And so it's really, be open to things. Make as an investor, make a list of things that you're hard no's. So for me, defense tech, hard no. I'm just not in it. I love it. I love the technology, but I'm just, there's plenty of other people who invest in that. That's just not for me. There's other people that need my money a little bit more, that find it harder. So I'll work with them. And it's just make a no list, because then you're open to being surprised. Always take the call, or always explore things that, they might not be your normal, but be open to it, because you might find that little nugget of gold, or you might, just get your eyes opened by something that you'd never even considered before. And that's when it's really, really special. And that's when it's really cool. And that's one of the reasons why I really like fintech, because it's technical, but then there's so much opportunity, because no one likes banking. No one likes looking after their money. No one likes applying for bank loans. No one likes filling in their insurance documents. All of this, there's so many pain points, that there's so many little things that can just solve these, and it will be amazing.
Lovely. Thank you. Thank you very much. Thank you both for this interesting talk. Thank you, Alison. Thank you, Benjamin. Carolina, we are back to you.
Thank you very much, Madalina, and thank you, Alison and Benjamin, for being in this very special episode. To our listeners, thank you for being part of this series of podcasts. We hope it has been insightful and that it will help you navigate the fintech waters in Europe.